Hi friends, welcome all. Today let us discuss about the topic tax liability on gift. Tax liability on gift is dealt in section 56 class 2 subclass 10. Gift means what? Gift can be of any kind. Gift can be of cash, gift can be of movable property, or gift can be of immovable property. Gift received by any person shall be taxable. Gift received by any person shall be taxable. It's first we can discuss about gift received in cash. What will be tax liability when the gift is received in cash? If any person has received any sum of money, if any person is receiving any sum of money from one or more person without consideration, and the aggregate value means the total gift value from many people we would have received, right? The 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 total amount, the aggregate value of all such gift received during the financial year exceeds 50,000. If in the financial year the gift we received in cash exceeds 50,000, not from one person, we need to calculate from all the person we received. The whole of the aggregate value of such sum shall be taxable under the head income from other sources. What they're saying, if you are receiving any cash gift, if you are receiving any gift as a cash in the financial year from one or more persons, if the total value of the gift we received in cash in the financial year exceeds 50,000, it will be taxable. If it was less than 50,000, it won't be taxable. Example, Mr. X has received 3 gift of 15,000. 3 into 15,000 will be 45,000. 15,000 each from his 3 friends. Entire amount of 45,000 is exempt because 45,000 is less than 50,000, right? So when the cash gift exceeds 50,000 only, it will be taxable. In this case it was 40,000, which was less than 50,000, so it won't be taxable. It will be exempt from income tax. But if he has received 3 gift of 20,000 each, so if you are receiving 3 gift of 20,000 each, 20,000 into 3 will be 60,000, so it was exceeding 50,000, so it will be taxable. The whole amount is taxable as a normal income because there is no specific tax percentage for this computation, so it will be added to the normal income we have earned, so it will be taxable on the basis of that. Shall be taxable. Further, it will be considered as normal income because there is no specific tax calculation for this, right? That's why. Gift is movable property. If the gift is received in movable property, if any person has received a gift of any property other than immovable property means it is movable property without consideration. If I am not paying anything but I am receiving a movable property without consideration, and the aggregate fair market value of such properties received during a particular year exceeds 50,000. The aggregate, it means the aggregate value of the fair market value of all the movable property which we have received is exceeding 50,000. It will be taxable under the head other source. But if the aggregate value of all such properties is up to 50,000, if the aggregate value is up to 50,000, it won't be taxable. If the aggregate value exceeds 50,000, it will be taxable. It will be exempt from income tax. If the consideration is less than the aggregate fair market value. In the above situation, we are not paying any amount, but in this situation, we are paying a consideration, but which is less than the aggregate fair market value. Okay. If the consideration is less than the aggregate fair market value, I am paying some amount which was less than the fair market value as on the date of transfer of such properties by an amount exceeding 50,000, and the difference between the amount paid and fair market value is exceeding 50,000 value as exceeds such consideration shall be taxable under the head income from other source. Further, it will be considered to be normal income. What they are saying is, while buying an movable property, I am paying some amount, but the fair market value is higher than the amount I paid. Then the difference between the amount I paid, the consideration I paid, and the fair market value of the movable property on the date of transfer is more than 50,000, means then then the difference between fair market value and the consideration I paid would be taxable under the head income from other source. Gift of immovable property. If any person has received any immovable property without consideration, I'm not paying anything, that is without consideration, it will be exempt if stamp duty value is up to 50,000. If the stamp duty value is up to 50,000, it will be exempt. But if the stamp duty value exceeds 50,000, entire stamp duty value, if the stamp duty value exceeds 50,000, entire stamp duty value shall be taxable under the head other source. Value of individual immovable property should be taken into consideration instead of aggregate of all such properties. In the before situation, when the gift is received in cash and also when the gift is received in movable property, we will be considering the aggregate value. We will be calculating the aggregate value, and if the aggregate value exceeds 50,000, it will be taxable. But while completing immovable property, only if the individual, we should not take into consideration for the aggregate value. Here we need to consider only the individual immovable property value. If the individual immovable property stamp duty exceeds 50,000 and I paid nothing but I received immovable property, the stamp duty value of the immovable property exceeds 50,000, then it will be taxable. If the stamp duty value does not exceed 50,000, it will be exempt from tax. Stamp duty means what? Stamp duty is tax amount paid to the government while transferring immovable property. When I am transferring the immovable property, I need to pay certain amount as tax to the government, that is known as stamp duty. If immovable property has been received for consideration, if an immovable property is received for consideration which is less than the stamp duty value, I am paying a consideration but the consideration was less than the stamp duty value of such property by an amount exceeding 50,000, and also stamp duty value is exceeding by more than 5% of the actual consideration. What they are saying is, if I'm paying some consideration to the person and I'm purchasing an immovable property, in this situation I'm paying an amount which is less than the stamp duty value, and if I'm paying less than the amount of stamp duty value, okay, I am paying an amount less than the stamp duty value. If the difference between the stamp duty value and the consideration I paid exceeds 50,000, and also from the point of view of amount I paid, if the stamp duty value exceeds more than 5%, then the stamp duty value would be the taxable amount. I will explain it in one example. Mr. X purchased immovable property for 3 lakh, but the stamp duty value is 5 lakh. He purchased for 3 lakh, but the stamp duty value is 5 lakh. In the point of view of 3 lakh into 5%, 15,000. So the difference is 2 lakh. So the difference is more than 5%, and also the stamp duty value is exceeding more than 50,000 than the actual consideration. So the difference amount 2 lakh would be taxable. Taxable amount shall be 2 lakh. Okay. Mr. X sold immovable property to Y. Mr. X is selling immovable property to Y for 1 crore, but the stamp duty value is 1 crore 5 lakh. So the stamp duty is 1 crore 5 lakh. In this situation, what can we do is, there is a difference of 5 lakh, so it was exceeding 50,000. From the point of view of 1 crore into 5%, it will be 5 lakh. So it was not exceeding 5 lakh, so it will be exempt. But if the stamp duty was 8 lakh, it is exceeding 5%. In this situation, if the stamp duty is 1 crore 8 lakh, it will be taxable to the amount of 8 lakh. To the extent of 8 lakh, it will be taxable. If the date of agreement fixing the amount of consideration for the transfer of immovable property and the date of registration are not the same, the date of, if I'm making an agreement with the seller for the purchase of an immovable property, okay, I'm making an agreement with the seller for the purchase of immovable property, and the date of agreement and the date of registration both were different date. and the stamp duty value on both the date will be differing, right? And in that situation, what should you do? That's the case here. If the date of agreement fixing the amount of consideration for the transfer of immovable property and the date of registration are not same in such case, the stamp duty value on the date of agreement taken into consideration, but part of the consideration should have been paid. The date of agreement, the stamp duty value on the date of agreement can be taken, but only if any part of the consideration should have been paid. If any part of the amount is paid on or before the date of agreement, then only we can take the stamp duty value on the date of agreement. We should pay via account payee check or account payee bank draft or any electronic clearing system through a bank account only through a bank account on or before the date of agreement. Example, Mr. X has entered into agreement with a builder ABC Limited. Mr. X is entering into agreement with ABC Limited on 1/7/2015. On 1/7/2015, Mr. X entered into agreement with the ABC Limited for purchase of one building for 20 lakh. Mr. X is purchasing a building for 20 lakh, but the stamp duty value is 27 lakh. And advance of 3 lakh is paid. Here the advance of 3 lakh is paid, so the stamp duty value on the date of agreement can be taken. So the difference is 7 lakh, right? So difference is 7 lakh. Okay, the amount is exceeding more than 5% of the actual consideration and also exceed 50,000. So the 7 lakh will be taxable. Okay, let's discuss. And advance of 3 lakh was given by check, but property was transferred in his name on 1/7/2019, and on that date on 1/7/2019 stamp duty value is 35 lakh. If in this case amount of gift shall be 7 lakh, as we discussed here. 7 lakh, because 27 lakh was the stamp duty value on the date of agreement. He also paid 3 lakh. He also paid 3 lakh on the date of agreement, so the stamp duty value on the date of agreement is taken into consideration. So the amount 7 lakhs will be taxable. The gift is exempt in the following cases. In the following cases only the gift will be exempt. Okay, if any individual has received any gift from any of his relative, if individual is receiving any gift from his relative, it will be exempt. For this purpose we need to know who are all considered as relative. Spouse of the individual. For the husband, wife is spouse, and also for the wife, husband is spouse. Brother or sister of the individual. So brother or sister of the individual, or brother or sister of the spouse of the individual. Okay, brother or sister of the spouse of the individual. Brother or sister either of the parents of the individual. Okay, brother or sister of either of the parents. Okay, fifth point. Any lineal ascendant or descendant. Lineal ascendant means the person who born before us, and also the lineal descendant means the person who are all born after us. Any lineal ascendant or descendant of the spouse of the individual. Our wife lineal ascendant, or our husband's lineal ascendant or descendant. Spouse of the person referred to two. In the two is brother and sister, brother's wife or sister's husband. Okay, and also 6 is any lineal ascendant of the spouse. For the spouse, grandfather or grandmother, like that. For the grandfather, the spouse is grandmother, like that. If any individual has received any gift from any person of amount on occasion of his or her marriage, only on the occasion of his or her marriage, only on the occasion, if any person receives from any person on the occasion of marriage, it will be exempt. The above situation is whenever we are receiving from relative, it will be exempt. From any person on the occasion of only marriage, it will be exempt. If gift is received by the parents of such an individual, in that case it will be taxable. So the person who are getting married should receive the gift. If the person's parents receives the gift, it will be taxable. If any If any individual has received a gift on the occasion of anniversary, it will be taxable. So we should be noted here. It is noted here only on the occasion of marriage. If we receive gift from any person, it will be exempt. If any person has received any gift under the will or inheritance, if you are receiving anything from the will or inheritance, it will be exempt. In contemplation of death of the payer or donor. In contemplation of death of the payer or donor. What is the meaning of contemplation of death? Contemplation of death means the apprehension of an individual that this life will end in the immediate future. In the immediate future, the person will be dying. His property he was writing in some other name, in some other person name. That is called as, let us say, contemplation of death means the apprehension of an individual that his life will end in the immediate future by the particular illness. By the particular illness, his life will be ending in the immediate future. He has a property. That property was writing in some other name. In that case, it will be exempt from any local authority, or charitable hospital, or charitable educational institution, or charitable trust, or other similar organization. For the meaning of computation, for the computation of gift, we should know what are the property. Property means the following capital assets. Property means only the following capital assets of the assets is namely immovable property. Immovable property consists of both building and land, shares and securities, jewelry, archaeological collections. Archaeological collection means ancient period coins like that. Drawings exclude painting. Drawings exclude painting drawings, but it was included here. Paintings, sculptures, any work of art, or bullion. Bullion can be gold and silver in the form of biscuits, bricks, or bars. If any person has received gift of any property, it will not be taxable. Other than the above mentioned, if a person receiving any gift of if a person is receiving gift, but it was not in the above mentioned gift, means it will be exempt. Example: Mr. X received a mobile phone valued 70,000. He was receiving a mobile phone valued 70,000 worth from his friend, but the mobile phone was not included in the above, right? In this case, it will be exempt from income tax, because in the income tax it was not mentioned as taxable, so it was exempt. Taxability of gift received by HUF, Hindu undivided family. If any Hindu undivided family has received any gift from any of its members, if an HUF is receiving gift from any of its members, it will be exempt from income tax. But if HUF has given gift to the members, it will be taxable. Okay. Example: HUF received 10 lakhs from its members, it will be exempt. Fourth one, taxability of stock in trade. Taxability of stock in trade. If any person has received any if any person has received any asset as stock in trade, it will not be taxable as gift, because if a person is receiving any gift as a stock in trade, it will be dealt in business or profession chapter, PJBP. It will not be dealt here, so that's why it won't come here. Mr. X is a dealer in gold and he has purchased gold for 20 lakhs. That's a he was a dealer in gold, and also he was purchasing gold for the cost of 20 lakhs, but the market value is 27 lakhs. The difference is exceeding more than 50%, also more than 50,000, and also more than 5%. Even though it will not be considered, it will not be dealt here, because it was relating to business or profession, so it will be dealt there. In this case, it will not be taxable as gift, because cost will be shown in the books as 20 lakhs, and the entire profit on sale shall be taxable under the head business or profession. Let us discuss some illustration. Mr. X, a dealer in share received the following without consideration during previous year 2019 from his friend Mr. Y. Mr. X is receiving the following things from his friend Y. Mr. X is a dealer in share. Cash gift of 75,000 on his anniversary 15th April 2019. Cash gift exceeding 50,000 and also it was received in the event of anniversary. It is fully taxable. Bullion was included in the definition of property. Bullion, the fair market value of which was 60,000 on his birthday, on the occasion of birthday. It is also taxable. So 60,000 taxable, 75,000 is taxable. Yeah, a plot of land at Faridabad on 1st July 2019. The stamp duty value of which is 5 lakh. On that date, Mr. Y purchased the land. Mr. Y purchased the land on April 2014. Mr. X is receiving the land without any consideration. The stamp duty value is 5 lakh. So the total 5 lakh is taxable. Mr. X purchased from his friend Z, who is also the dealer in shares, 1000 shares of X Limited at 400 each on 19th June 2019. The fair market value of which was 600 each on the day. The fair market value of the share of per share is 600. He purchased for 400. The difference is 200. Even though the difference is 200, it won't be dealt here because X is a dealer in shares, so it will be taxed under PGBP. It won't be coming here. Mr. X sold the shares in the course of business on 23rd June 2008. It will also be taxable under PGBP. On 1st November 2019, Mr. X took possession of property booked by him 2 years before at 20 lakhs. Mr. X booked the building for 20 lakhs. The stamp duty value of the property as on 1st November 2019 was 32 lakhs. And on the date of booking was 23 lakh. He paid 1 lakh by check. Mr. X paid 1 lakh by check. The stamp duty value on the date of agreement is 20 lakh, but the agreement value is 20 lakh. So the difference is 3 lakh. So the 3 lakh will be taxable. So as we discussed here, like cash gift, total 75,000 is taxable. Bullion 6,000 is taxable. Stamp duty value of the plot, Mr. X got for free, so the 5 lakhs is taxable. So the difference amount of the stamp duty value is 3 lakhs. So the 3 lakhs is taxable. Altogether 9 lakh 35,000 is taxable. Next, tax liability of gift from employer. If the employee is receiving any gift from the employer, then what will be the tax treatment? A gift given by the employer in kind up to 5,000. So in kind is up to 5,000. In cash, whatever the amount we receive, it is fully taxable. In aggregate, during the particular year is exempt, and the excess over it is taxable. So if you are receiving gift in the form of cash from the employer, it will be taxable. If you are receiving the gift in the form of kind, it is exempt up to the aggregate value of 5,000. If the aggregate value exceeds 5,000, if the aggregate value exceeds 5,000, then only it will be taxable. If the aggregate value does not exceed 5,000, it won't be taxable. Example: Mr. X is employed in ABC Limited. Mr. X is employed in ABC Limited and he has received a cash gift of 11,000. So if a person received in cash, it will be fully taxable, right? So the total 11,000 will be taxable from his employer. In the case, tax liability shall be 11,000 and it will be income under the head salary and shall be taxable at the normal rate. If Mr. X has received one wristwatch, it is in kind, of 11,000 from his employer, taxable amount shall be 6,000 because if the employee receives gift from the employer in kind, it is exempt up to 5,000. Here the wristwatch value is 11,000. It is exempt up to 5,000. So 11,000 minus 5,000, it will be 6,000. So the 6,000 will be taxable. Taxability on gift received in connection with business or profession. The value of any gift perquisite, whether convertible into money or not. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession. Arising from a business or the exercise of a profession. Okay. If any person received a gift or benefit or perquisite, note it down. If any person received any gift or benefit or perquisite either in cash or in kind from any of his client. If I am receiving any gift from the client in the form of benefit or perquisite or gift, it will be considered to be business receipt and shall be taken into consideration while computing income under the head business or profession. I should treat such gift or benefit or perquisite as a business receipt. A doctor has received a gift of 40,000 from one of his client. In this case, it will be considered to be income under the head business or profession. Okay. Taxability of scholarship, award or reward. What will be the tax treatment for scholarship, award or reward? For scholarship, it is mentioned in the section 10 of 16. Any scholarship received by a person for meeting the cost of education, only for the meeting the cost of education, shall be exempt from income tax. Only for the meeting of cost of education, it will be exempt in the case of scholarship. In the case of award or reward, it is explained in section 10 of 17A. Section 10 subsection 17A. If the award or reward is given by the institution owned by central government or state government, it will be exempt. If the award or reward is received from the private sector, only if the award is approved by the central government, it will be exempt. In other case, it will be taxable. Taxability of compensation or other payment in connection with the employment. Taxability of compensation in connection with the employment. If any compensation or the other payment, due or received by any person by whatever name called, in connection with termination or modification of the terms and conditions of the employment. If any person receives money in connection with termination or modification of the employment, is taxable under income from other source. It will be taxable under income from other source if not covered under section salary, if not covered under the head salary. If an compensation is received in connection with employment due to termination or modification of the employment terms and conditions, if not taxed under the head salary, it will be taxed under income from other source. Let us discuss on some May 2018. Okay, new syllabus sum. May 2018 question paper, new syllabus sum. Question number 5A. 5 of A. Discuss the liability of the following receipts in the hands of Mr. Sanjay Kamboj under the Income Tax Act 1961 for assessment year 2020-21. First, 51,000 received from his sister living in US on 1/6/2019. So the sister is covered under the relative definition. If the amount is received from a relative at any time, it will be exempt. So as per section 56(2)(10), sister is covered under the relative definition, hence not taxable. Received a car from his friend on payment of 2,50,000. The fair market value of which was 5,50,000. The fair market value is 5,50,000. He has paid only 2,50,000. So the difference is 3 lakh, but the car is not covered under the definition of property. So it won't be taxable. As per section 56(2)(10), car is not covered under the definition of property and hence not taxable. That's it. It is easy. Thank you.